We want to begin with news from the Bombay Stock Exchange, where the Sensex has breached the 24,000 point mark. This is the first time this has happened in the stock exchange's history. Remember, the stock markets have been rising in anticipation of a stable Narendra Modi led government, and they surged on Monday as the Sensex crossed the 23,500 point mark. Akash Jindal is a market analyst and joins us on the phone line right now for more. Akash, help viewers understand what's going on. There are reports that this is all about the stability that has now been predicted by the exit polls.
Yes, I think I have to endorse your reports because, see, now in case exit polls are true, market is expecting a strong and stable government, and that is what the economy needs. Economy needs somebody, a government which can take decisions, which has the power and the numbers to take decisions and to implement those decisions. That is what the market expects from a strong and stable government, and in case the exit poll results are true, perhaps that is what's going to happen. And not only our own investors, but foreign investors are eyeing our economy with a lot of optimism and confidence. Now, the message for the investors, my earlier predictions regarding Sensex have already been true. Now, the message for the investors, or the further prediction for the investors from my organization, akashjindal.in, is that perhaps between the budget and Diwali, the Sensex may perhaps cross 26,000, and by 31st March of the coming year, the Sensex may perhaps cross 30,000 level also.
Akash, what's that based on? What are these predictions based on? The Indian economy is still nowhere near its peak at 8.5–9% growth. Yeah,
it's an interesting question. There's a reason and basis for this prediction. Firstly, our competition as far as FII investments is concerned is not doing very well. Our competitors, firstly Russia, they have Ukraine issue. Secondly, China, they have a lesser GDP issue. Brazil also has problems. So FIIs have India, which is performing better than other economies. Secondly, our GDP is down, but the GDP is down because of certain issues, certain indigenous issues like policy paralysis and things not happening. The moment we see things happening, GDP would escalate. And another thing which I wanted to come to was dollar. Now, dollar I expect to inch up to reduce to 57 rupees. Now, with dollar reduction up to that level, our economy is going to boom because our crude oil imports will become cheaper. That will reduce our deficit, which is considered to be a big concern. Also, our inflation and interest are reduce our interest rates. So, all this in turn would help the stock market and the economy to grow. So I think economy as of now is not looking that rosy, but there's a lot room in the economy to be rosier, and that's what we expect from a strong and stable government, that they can take those decisions which can push the economy into a rosier, into a better picture. I would look even further that not only the stock market would grow, not only the dollar would reduce, perhaps our inflation would also reduce with dollar coming down.
Akash, I have one more question because I'm running out of time. Who's buying and what are they buying right now?
See, basically it has been FII-led move. So
that's foreign investors.
Yeah, foreign investors or international investors. They are the main investors. They'll be followed by institutions. And as of now, banks have been the main point of rally. But what I expect is the rally to be more broad-based going ahead. I mean, going ahead, my prediction is that the boom is going to be in infrastructure, in bank as well as the real estate and large mid-caps also.
Okay, so infrastructure, banks, real estate and large mid-caps, large and mid-cap companies. Akash Jindal helping us understand what's going on in stock markets at this time.